Hey traders, welcome to Charts and Coffee. Great to see everybody. Happy Tuesday. We have a pretty quiet economic calendar to kick off today. So if you're taking a look at Forex Factory, Trading Economics, wherever it is you check out the hot zones for the day, you'll notice that it is quite nice, peaceful, and empty for the US session. However, that is just a bit of a reprieve before we get to looking at what we have coming up tomorrow and Thursday. So we'll talk more about this tomorrow, but if you haven't already taken a peek, Tuesday is nice and empty, but we move into tomorrow. We've got the CPI, which of course is a major inflation metric. We've got Bowman, FOMC member Bowman, the Bank of Canada, which has been moving yields and sometimes even the euro and the US dollar on the release. So heads up for that. And then, of course, more FOMC speak, and then the FOMC meeting minutes, which again is a backwards but more detailed look at what we were seeing during the previous meeting. So that'll be released. And then here comes Thursday, PPI, another inflation metric, unemployment claims, and now another major central bank. So Bank of Canada on Wednesday, European Central Bank on Thursday, and then the 30-year bond auction. Of course, we've just got a nice sprinkling of FOMC members talking about who knows what, certainly confusing the markets. And that is what we have for the next 2 days. So today, bit of a reprieve, like yesterday, by the way. And yesterday we had a pretty decent morning of day trading. And that just reminds me to mention my Sector Secrets members for the first hour, 9:20 to 10:30. So 10 minutes before the bell rings to 10:30, we have that focus on day trading Monday through Friday. So while those day trades can continue throughout the day, we really just hone in on those 5-minute charts. In the early part of the morning, we put on 2 day trades yesterday, went 2 for 2, which is great. So don't forget, or remember, I should say, the mind doesn't know, right? So I got to remember that. Remember the join is at 9:20. All right. So we are then taking a peek at the second place I wanted to bring everyone's attention to is our normalized performance. So this week I have the weekly watch list here at Simpler Trading. So members, you can check that out. It's at the bottom of just about every page on the Simpler Trading website dashboards. So one of the things that we're looking at is just remembering that Thursday's action was only one of 3 sessions that exceeded 68% probability. I have that there in the notes. It was an anomaly of a session. However, it did usher in a wobble, as we like to say, a little bit of a wobble in the overall uptrend. Doesn't mean that we turn bearish. We just know that it's a bit of a wobble, that we should temper our expectations for continued moves higher. I have my dips happen. Shirt on today, reminding myself that we are still in buy the dip mode, but it just may not be in the places that we have been. Gone are the days of looking at necessarily semis and tech, and now we're ushering in over the last month strength in things like energies, metals. You'll see GDX at top of this list. We've had a swing buy in GLD now for, is it almost 2 weeks? Coming into 2 weeks right now. So if take a look at the last 2 weeks of GLD, that's the swing buy that we've had on. So remember, there are some gorgeous trends. We don't want to limit ourselves to day trading alone. I love to day trade, but we want to shift gears to what we're doing in swing trading. And swing trading has absolutely been a big part of what and where the account growth has been. And that reminds me, if you haven't already, all right, I've got this all screwed up, but no, that's not it. I have our webinar link. Oh, here it is. I'll just grab this. So on Wednesday, here we go. Just got to open this up. There we go. On Wednesday, if you haven't already registered, you're probably going to get the email, probably already have. What are we traders up against? How do we handle and thrive? What are the algos doing? What do algos even do, right? I mean, is it Skynet? Is the Terminators are on their way? Kinda, but not that bad. Not that bad. How do we manage risk, even possibly lower risk? And how did 2024 events play into the rest of this year? Rod, we've had this great trend. Is it over? No, it's not. It's just shifting. So let's talk a little bit more about this shift. Be sure to join me on Wednesday for our webinar where we continue the conversation, right? And so now, when I look at what is at the top of the list, we have things like utilities, mining and metals, energy, oil and gas explorers, of course, the gold miners, financials, basic materials. You can even see agribusiness, industrials, and home builders. So very different look. Tech is down near the bottom. SMH, and by the way, this is a 1 month or 30-day look back. About halfway through this month, we'll start looking at month to date. April just isn't old enough yet to do that, but we'll start looking at month to date as we get into next week. And at that point, we'll start to see, all right, what's following through from the last 30 days into April and gaining traction. So that is another aspect of, frankly, watch list building, right? I got a question here asking TradingView. Have I checked out TradingView's calendar? I haven't. I have not. Will do. One of the reasons I like the Forex Factory is simply because for a lot of traders, and I will check it out, Mark, thank you, is that they have the little red icon, which is where I got the term red hot zone. That's where I came up with that. Like, oh, that's a red hot zone. Time-based, high impact, high volatility event. So if you take a look at Forex Factory, yeah, I will check that out. Mark, thanks for the heads up. Cool. All right. So that's where we sit right now in terms of the overall movement in sectors. Now, I get this question quite a bit. And where are my drawing tools? Give me one moment. What's a morning without drawing tools? Where are they? Oh my gosh. This is the problem with having 9 monitors. There it is. I know it's on one of these. There we go. Okay, so the question that comes up a lot is, okay, Rog, what about, right, rotation? Okay, first of all, let's get a couple things straight about rotation. One, you really can't predict when rotation is going to happen, right? But you can understand where it's most likely to happen. And so to understand rotation, you're not looking at month to date or even 1 month. You're typically looking at 3 months or even a year to date rotation. And that's where even quarter to date, which is going to be tough because that's only a couple weeks. So one of the things to remember is rotation happens typically like this. If you look at this list, here's the top of the list. Here's the bottom of the list. Rotation is quite literally things at the top, rotating down to the bottom, which is what? Profit taking. And then things that were lagging or are considered to be a bargain or a deal and have an entire quarter now to appreciate will be bought. So you have profit taking at the top of the list, and then you have new positions being built in places that were lagging. That's really all rotation is. But the timing is what we never know, right? Is it sometimes more likely at the beginning and end of quarters? Yes. The beginning and end of months? Yes. But the best way to really think about it is your trading life doesn't need to predict rotation. Frankly, most of trading is going to be about your relative outperformers. Longer term, so let's say, Rog, I'm looking at a weekly time frame. I'm looking at my portfolio. I'm looking at a longer term time horizon, months, if not years. That's where rotation is probably a little bit more important because I don't want to add to a portfolio things that are punching up to higher highs or at new highs. I want to find things that are lagging, pulling back. And so it's a little bit different an approach when we're looking at longer term versus what we do as traders. Let's face it. Is there any value as a trader? Now, remember, we have to keep in mind the hats we're wearing. When I'm talking about swing trading, overnight approach, again, what we're going to be talking about on Wednesday, when I'm talking about this kind of stuff, what am I talking about? I'm talking about a 1-hour chart. I'm talking about a daily time frame, right? I'm talking about trends on these 2 time frames that may go, say, 1 to 3 days, maybe even out to 10 days plus. So when we're talking about a longer month-by-month time horizon, it has usually very little application to the setups that we're looking at on, say, a 1-hour daily or heaven forbid, you're looking even smaller than these time frames. So remember, match up your time frame and your expectation, and that's time horizon. How long, how many days could we be in the trade? And again, what's been really building the account this year has been focusing on this window of somewhere between 1 and 10 days. I know that seems like a lot. It's not. It just depends on the time frame we're setting up and saying, all right, let's take advantage of the trend that we have in focus. And this is where I'm saying you're going to find it at the top of the lists. I hope that makes sense. And that's really how we want to think about building our watch list and adapting to the opportunities right now. So rather than lamenting, right? Rather than lamenting SMH, rather than lamenting the NASDAQ, right? We're not going to fall in love with any sector. We're not going to fall in love with any symbol. Although I got to admit, I'm a little in love with GLD right now. And I'm a little bit more than crushing FCX, right? Yeah, I have if I had little hearts that could appear. I don't know if I can do that. I would. Do I have little hearts that could appear? I don't. That'd be so cool if I could do some heart emojis. So there are trends, but this is not NVIDIA. This is not talking about tech stocks, really, is it? However, there are a few tech stocks that are still worth mentioning. So let's jump on over there really quickly. Amazon, definitely worth keeping an eye on for sure. That's one of the better trends that we've got out there. Now, when we think about tech, and I love the question here, what about Disney? Sure. So believe it or not, and I know a lot of you know this, especially if you're Sector Secrets Mastery members, communication, XLC, is the number 2 weighted sector in the NASDAQ. And this is where we have XLC names. All right, what are XLC names, Rog? Well, we got to throw Google in there if we're going to give Amazon a shout out. So Google, Meta is in that group, is in that group as well. What is going on with this phone? I'm going to shut this thing up. All right. So, oh, that's my ringtone. Okay. All right. So if I'm looking at Meta, if I'm looking at Google, that's all part of XLC. So is Netflix, by the way. So is Netflix. But yes, that brings us to Disney, right? I had my, by the way, we had a new moon on Monday. Now, right now, I'm channeling my, I love this ringtone. We had a new moon on Monday. So as the middle schooler in me is just all gleeful because that's a Duran Duran song. Oh, that just makes me smile. That's still my ringtone. All right. So if we have Disney, let's talk about Disney for a moment. So let's take a look at this year of Disney. Do we want to buy a pullback? Yes. Is it a trend? Absolutely. Absolutely. So take a look at what the energy is. What is this down here? This is energy and this is direction, right? That's really what it is. We can call it structure. We can call it trend. You know, I've called it both. But a lot of times we start using words and we don't really think about what is it. And it is absolutely energy and direction. The energy is bullish. The direction is up. So that means that not only is the mean reversion, which are these 3 lines here, whenever they are visible, the mean reversion is at least a valid level to consider if price gets there. And in the meantime, we focus on the alternative. All right. And that is the daily price movement range. The daily price movement range is in many ways, you know, one of the things that when we think about Skynet algorithms, right? Well, one of the things we think about is what are they looking at? They're looking at size. They're looking at volatility, not necessarily price alone. So if we want to decode what those things are doing and seeking and maybe coattail that, take advantage of that, we start to look at those other aspects, those other factors beyond price. And that's really how traders have to evolve right now. This has been happening since 2020. But a funny thing happened in 2020. We didn't care because frankly, you know, as I like to say, my cat could have stomped across my keyboard and put on a winning trade in 2020. So the bottom line is in 2020, we didn't care. In 2021, we still didn't care because there was still some of the remnants of the strength. But come 22, 23, now into 2024, these factors, what's happening beyond price, volume, volatility, time. And this is where we're seeing the influence of retail traders, algorithms, 0 days to expiration. start to really show what they have been doing for quite a few years now. We just didn't notice in 2020 because the Federal Reserve embarked on some of the most generous monetary policy in the history of ever. And it masked a lot of that, right? It hid a lot of that. It camouflaged it because things were just going straight up. We didn't care why. Do you think those factors, 0 days to expiration options, retail traders, and algos were at work there too? Absolutely, but we didn't care. Now we're starting to care. Now we're starting to notice. Thursday's action was a really good example. So back to Diz, all those things are still in place. We ask ourselves, where is the mean reversion? Is it valid? And that's both here, green, yellow, red lines, and then bullish energy, right? Bullish direction. And then now I'll take a look at you can see here, the volatility zones. And a lot of folks ask, okay, Rock, how do these volatility zones, work? Every single day, we're looking at the specific 6-month historical volatility of that symbol. So really important adjustment that we continue to make as we deal with, well, frankly, modern markets, right? What are modern markets presenting? And, the cool thing is, along with technology that sometimes feels like the bane of our existence, we can utilize it to our advantage, right? We don't have to be victims to other people's algos and tech. We just come up with our own. And that's really kind of an exciting part of trading. I love that. Schlumberger, Sachin, I love it. Schlumberger was in the top tier outlook. Definitely want to look for opportunities in Schlumberger, bullish energy, bullish direction, green, right? Those green candles. And because we're nowhere near the mean reversion, we'll focus on the daily price movement range. This will be definitely one to keep an eye on. But it's really going to be tethered in so many ways to this narrative. Crude oil. Schlumberger is heavily weighted in oil services as well as the energy sector. But crude oil is really the reason, it's the power of what's happening in those stocks. So crude continuing higher is definitely going to help. Do we need it? No, in a lot of ways, the stocks are going to have energy of their own because crude is crossing certain thresholds like 80, 82, 84, now $86 a barrel. So the movement, that energy is already there. So even if crude has a down day, it's not as if this trend is going to, disassemble itself overnight. Not at all. Even Thursday hardly made XLE flinch. Not even at all. So great place to look, Sachin. SLB, Schlumberger, heavily weighted in XLE and OIH, and definitely worth keeping an eye on. All right. Next up is gold. Up till when? Are you asking me to read the future? I don't know, my friend. We'll keep riding it. Look, if I were to limit myself on gold, right? This is an option. I think we were just talking about this the other day. This was an option, and I believe we bought for $3.55. So let's talk about that price for a moment. How many of you, we only have about a minute and a half left, how many of you are trading what you would consider to be a smaller account? Maybe $7,500, $5,000 or less, right? Quite a few folks, maybe. All right. What about those of you that are trading a larger account, maybe $50,000, $75,000, $100,000 even? The cool thing is, with something like gold, for a smaller account, how difficult would it be to buy $2, $3, $4, $355 options? You might say, Rog, I can do that. I can spend about $1,000 and buy 3 options. Sure, I can do that. So these options have gone from $355 to $1,710, and that was yesterday. That doesn't include what I believe to be is another move higher on GC. Yahtzee, these are going to be probably closing on $18. Okay. So how many $3 and change options could you buy? Now, those of you in a larger account might say, Rog, I might just trade gold itself. Gold futures, no problem. It's the same trade. Rog, I can buy in my account, I might just buy 22 of these, not 2 of these, because the liquidity is there. That's scalability. This is not about having a tactic necessarily for a small versus large account. This is about having an ability to focus on scalable options, which are liquid and affordable. So GLD is a great example, absolutely fantastic example of continuation. For how long? I'm going to be in this likely until I have to get out because of expiration. We have April 19 calls here. So In terms of seasonality, I'm not going to worry about that. There are seasonal factors, but the trend is intact. As long as the trend is intact and the daily price movement ranges are supporting, we just let it do its thing. That's it. We're not going to try to predict where the tops are. We'll just ride it out until either expiration, scaling out along the way. All right. Thank you as always, gang, for being here for Charts and Coffee. We'll be back right here at the Simpler Trading YouTube, my YouTube, and also my Twitter. Remember, there are uptrends, and as my shirt says, dips happen. I will see you all on Wednesday for our webinar. Can't wait to show you more examples, choppy market examples. A lot of folks are asking, Rog, what if we don't keep trending? What happens if we go to chop? Can top tier help me? I'm going to walk through all that as well. Be good to each other, gang. I'll talk with you soon.